Everyone wants to be an exciting investor. Everybody wants to find the next Tesla, the next Bitcoin, the next AI stock that's going to change their life. But if you want to be rich, really rich from stock market investing, boring works. Boring gets you there almost every time. Sure, you can take the exciting route to wealth. It's likely to be bumpier, less predictable, and you have a much higher chance of failure. But I'm going to show you exactly why being a boring investor beats the exciting approach almost every single time. I've been an exciting, adventurous investor, and I've been a boring investor too. Being a boring investor is less stressful, and it's less emotional, and it's better. Most novice investors, or those early out in their investing life, want excitement. It feels good to tell people that you've invested in some cool company. It's fun to check your account every day. Well, it's fun until it's not. You'll get a little dopamine hit when you see a stock jump 20% overnight. But here's the data. The average retail investor underperforms the market by around 3 to 5% a year. And the main reason isn't because they're stupid, it's because they're chasing excitement and getting too emotional over their investments. They're constantly buying hot stocks, selling when they panic, buying when they feel greedy. And it's just this never-ending cycle. Exciting investing equals emotional investing. People think that they're going to be the exception to that rule and that they can be emotional and still effective, but evidence and history suggests otherwise. Emotional about finances kills wealth over the long term. So what do I mean when I say be a boring investor? I mean doing 3 things. Invest regularly, no matter what's happening in the market. Ignore the noise, the news, the hype, the short-term drama in the news, and focus on a simple, proven plan that compounds over decades. Boring investors don't brag at dinner parties. Boring investors don't care about beating the market this year. Boring investors are happy to be rich in 20 years, not desperate to look clever in 20 minutes. Boring long-term investors end up with more money more often than not, and they sleep better at night too. Now, don't get me wrong, there are expert stock pickers out there who day trade or churn through different stocks, buying low, selling high. Of course there are, but chances that you're one of those people, you're probably not. Those people are few and far between, and they aren't emotional or exciting investors. They are smart traders who do their research and have the skills to trade that way. Most of us don't have that. Most investors don't have the time, the energy, skills, or interest in that sort of trading. So what do boring investors actually do? Well, they're boring, right? So they use things like index funds or ETFs, like a global equity index fund. Maybe a few bonds if they want a little less risk. That's it, pretty much. They automate everything. They automate all of their investing. Regular saving every month, no thinking, no timing, no stressing out over what they're going to do this week. They don't touch it. They don't check their account 10 times a day. They leave it alone to grow over the long term. Now, don't get me wrong, we all like a little excitement, and I myself have a few percent of my overall portfolio in a sort of play portfolio where I take a punt on individual stocks, but it's money I can afford to lose, and it's the price I pay for my little bit of excitement in my overall portfolio. But 95% of your portfolio should be boring. No crypto roulette, no penny stocks, and no hype. Will you miss some great opportunities? Well, probably, but would you have got the timing right on those anyway? Will you build true value and wealth over time through boring investing? Well, yeah, history suggests you will. Even though nothing is guaranteed, boring long-term investing is proven by history to be the best long-term approach. So why would you do it any other way? Maybe you've been an exciting investor up to now and you're fed up with it and you want to change. Well, the first thing you need to do is admit what you're really chasing. Be honest. Are you investing to build wealth, or are you in it for the thrill? Set up a simple plan, decide your split, stocks, bonds, etc. Pick your funds, automate your monthly savings and investing, and then separate that fun money I talked about earlier. Because if you must scratch that itch, take the 5% of your money and do whatever you want with it, but use the other 95% for boring, compounding, long-term investments. Measure the right thing too. Don't measure daily returns. Measure whether you've stuck to the plan. This approach works even if you start late, and trust me, in 20 years you'll thank yourself for being boring earlier in life. But it's not just about the money. There's another reason to love boring investing, less stress, more time, more energy to focus on your family, your relationships, your career, and your business, and of course, your life. You'll make better decisions everywhere in your life because your money isn't a daily emotional roller coaster. And believe me, those close to you will thank you for that. So here's the choice. Do you want to be exciting or do you want to be wealthy? Be a boring investor. Automate it. Forget about it. And watch what happens. If you found this video helpful, hit like, subscribe, and share it with someone who's constantly chasing the next hot tip. They need this video more than they realize. Thank you for watching. I really do appreciate it. Again, please do like or subscribe. It really helps grow the channel and helps more people. My name is David Paul. Thanks for watching. Bye for now.